Good evening and welcome to the Australian Stock Market Show. We do hope you've had a great week so far. A quote from Australian photographer Bill Henson reminded me of how the stock market works. He said, "Most life is grey with a little tiny bit of black and white." Tonight we aim to navigate you through the grey of the stock market and give you as much black and white as we can whilst we answer your questions and bring you our upfront, no BS approach to all things stock market. Our main topic for tonight is best 5 mining stocks to buy. BHP and RIO dropped 35%, FMG was down 45%. Hello, I'm Janine Cox, your host for tonight, and joining me is Dale Gillham, and we're Australia's most trusted stock market educators. Hello.
Hey.
How are you?
I'm super fantastic. Geez, it's cold at the moment, isn't it?
Oh, I know. Are we in the middle of winter?
Well, that's what the TV said. They said we've had the coldest run of days ever on record for this time of year.
Wow.
I didn't want to experience that, though.
No? Do you think we might be heading into another ice age?
Possibly, but I'm not getting into that anyway. I'm getting out and enjoying the sunshine when we've got it anyhow.
You might get into trouble.
I'm always
You
in
always
trouble.
put your foot in it.
I'm always in trouble anyway. Well, before we get into our first segment for tonight, again, we're going to take some live calls on the show. So if you do want to chat to Janine and I and ask a question, then this is your opportunity to pick up your phone and call us. Now, the number you need to dial is 0392909988. That's 03 for Melbourne, 92909988. Now, to get things started, as always, the first person to call into the show right now will get a free copy of my latest book. Now, I know both Janine and I are super keen to chat to you, so pick up your phone right now and get dialing.
While we wait for you to call, it is the third Tuesday in the month, and this means we take a look at world stock markets. So let's get into the charts.
All right, on your screen right now is the watch list of the world markets. Now, you've set that on that monthly?
Just to confuse you, yes.
Just to confuse me,
Some weeks I put it daily, monthly, yearly.
My wife keeps me guessing as well.
Got to make it interesting.
You can too. So let's get onto the chart anyway.
All right. At the top, you're going to love this one.
I will.
It's your favourite index to say. Say it again.
The CAC.
Say it again.
The CAC.
The CAC 40 index.
And I'm not being a crow. CAC, CAC, CAC.
Okay, up 4.3%, or 7%, I should say. Be precise, Janine. Nikkei stock average 225, up 3%. The DAX index, okay, up nearly 3%. So we're seeing all of the European markets moving up.
Nikkei is Japan, and Tokyo is also up in those top few.
Yeah, well, we've got the European 600 index up 2.7%, up there as well. And then, like you said, Tokyo's up 2.45%. India's really holding on as well, 2.4%. And then we're seeing US markets underneath that, sort of middle of the board there, 2.29 for the NASDAQ Composite and the NASDAQ 100, 2.14. The Australian Ordinaries Index up 2.08% in the middle of the board, or just slightly below. The S&P ASX 200, 2%, so there's not much difference in there. Obviously, the big stocks are pushing the market and pulling the market in the direction that we're going at the moment. But S&P 500 is actually up only 1.68. So what do you make of that?
Well, at the moment, it was the US market. I know it's gone through its earnings season, so there was like 3 weeks of that. Financials did really, really well. Technology did really well. In fact, pretty much 85-90% of companies in the US actually delivered earnings above what expectations was, slightly higher than what it normally is from that. So there's a bit of buoyancy in the US market anyway. So
there's been all of this copycat between the US and Australia. Do you think that we're going to continue to follow anything about what the US market is doing at the moment? Are the themes likely to
I think
be
it is
consistent?
because I think there's that whole, what do you call it, the push by media is always, every morning is what the Dow did, what the US market did. So it's got everybody aligned saying, well, whatever the US market did, they're going to start thinking the same way, aren't they? And I know, our fund managers and our financial services industry looks more like the US one every single day. It just keeps moving towards it.
Well, I thought it was quite interesting because we've got that, the triangle of power, if you like, between Australia, the US and the UK. And when you look at the stock market charts, Australia is not like the US.
No.
And it's not like the UK exactly, but it's somewhere in the middle of all that.
Somewhere in the middle of it all, yeah. Yeah, totally agree. So, I mean, it is looking good. The world markets are looking really good. I mean, obviously the US market has been up and down a little bit lately. I don't know, our market, we're not making new highs. We're struggling a little bit, which we talked about the other week. But it's all looking pretty good, isn't it? It
is. Look, the FTSE's are also up 1.58%. That's consistently lagging. Straits Times Industrial Index up 1.33 and the Dow Jones only up 0.75. So Aussie market's leading the US market.
Yeah, in the US market, and I didn't talk about it yesterday with Jim Beach when I was talking about the US market on our stuff that we do for Flicks, but if you look at momentum on the US market the last 3 months, if you look at all the Dow stocks, there's only 6 outperforming the S&P 500 or the momentum of the S&P 500. The rest are lagging on that whole, or lagging or slightly improving, but they're way behind it. And same with the S&P 500, you're looking at big weighting of their stocks are not outperforming it, they're actually underperforming it. So their markets have been driven by just a few stocks, big stocks. So, and looking at our market, I know last week, looking at that, and the last couple of weeks, you've had financials
and the financials going holding our market up.
It has been holding our market up. So there's only a few stocks holding our market where it is at the moment. So, yeah.
All right, thank you for that. And the Hang Seng's almost line ball there, 0.505. And Shanghai Composite Index negative, slightly negative. And then we've got New Zealand market is actually down 1%. So that's a wrap for what's happening around the world.
Okay, well, thank you very much for that one. So
my pleasure. All right, now it's time we get into our first email for the night.
Yay. All right, our first email tonight is from Chris, who says, what's your view on a volume profile indicator that shows the volume traded at a certain price over the history? As you talked about banks in the last episodes, I've attached a weekly chart of Westpac as an example, Chris. Now, interesting thing, and what he's talking about is basically a volume histogram, but on the price scale of how many times, and it shows how many times the volume at those specific prices. So it's one of those 10,000 indicators that you can put on the chart. So I'm going to put it on the chart.
Okay.
Well, I'm going to show people if you go to the charts and have a really good look at it. So if we click on here, you can see all of these here are just different areas of different tools that we can put on to different charts. But if I just go into price, you can see just so many different tools all the way through here.
Oh my goodness.
There is just
that creates a minefield for people.
So this is the one he's talking about, but it's just, the Optima just calls it differently. So if I click on there, you can see this is what he's talking about. It's like a histogram there. Now I can put this on the left or the right of the chart if I'd like to do it. I can move it over to the
Okay, so when you look at this, what is it, just that your first, what are you seeing initially when you look at that Instagram?
Basically it means, all it's saying is at this price, around this price, now I can put as many of these periods in I like, so I can make them 20 cents, 50 cents, $1, whatever, as many different price levels as I want. This is just saying on this chart, there's most of the trading is around, or the volume's happening around these sorts of levels. So what does that actually mean? Probably not a lot. And this is really what I want to talk about, Chris, and a lot of people. They see all these tools that they can get on these broker websites and these platforms, and they go, oh, this is great, this is great, this is great.
You could convince yourself that that's telling you something.
Oh, I think this is CREP. It's like, what do you need it? It's like you just make it more complex. And and I've had people, brokers into my office and saying, oh, we do this, and we've got 500 indicators on our platform. And I go, yeah, cool, keep them all. But because what they do is they distract you from what's really, really there on the chart. And so you can put a million of these things on there, Chris, and they won't really mean stuff. But you just saw how many of those, how many different indicators there were just on price alone, let alone volume, let alone time, let alone all the other things that are on there. So I think Optima's got like 300-400 or
I agree with you. There's not a lot that price won't tell you. So you can look at that chart there and look at the bar chart and see across here. I'll just grab the crosshair for a minute if the mouse will just get under control.
You can
come back, mouse. You can see across here that the stock does like to spend its time around that $25.40 mark. But you can tell that from the price price chart.
You can just tell that from the price chart. You don't need another indicator on your chart to do that. And I mean, I've seen, how many charts have you seen where it looks like a whole pile of chooks has run across it?
Oh, look, I mean, you know, I can remember years ago you and I having this conversation, and I had, I think it was 4 or 5 different boxes on my screen that I could look at different aspects of analysis, and it was about you shifting my thinking into looking at just the bar chart, and I really appreciate that.
So, Chris, throw it out the window. Don't really need it. Now we've got a caller on the line. I believe we've got Dwayne on the line. Have we, Dwayne?
Hi Dale, how you going, mate?
Good. They told me there was a good-looking dude on the phone. Is that you?
No, they lied to you.
That's your brother. Okay. You got a question for us tonight, Dwayne?
Yes, and first of all, thank you very much, Dale and Janine. Brilliant show, very professional. Love it.
My pleasure. Our pleasure. Sorry. So you've got a question for us, mate?
Yes, I was just curious if you could have a look at TWE for me, please.
Yeah, no problems. Do you own that stock or you're not owning it?
Yeah, I bought late August pretty much at its peak.
Okay.
Started to go down a fair bit. I've got a stop loss in place.
Good.
I'm probably about 75% of the way to there.
Yep. Fantastic.
Regardless of what our conversation today, I'll stick to my stop loss. But I was just curious that I've started to notice, to me, it looks like it's starting to start to trade below the trend line. And I was just interested if you guys can probably confirm what I'm thinking, that it's going to continue to go down or sideways, or maybe there could be some optimism about it coming up.
Well, I'm sure we can sort it out for you, Dwayne, but I'll let Janine bring up the chart and have a go at it. But thank you for your call today.
No, thank you very much.
All right, Janine, it's over to you.
Great question. Interesting stock. Well done, Dwayne. Look, this one, I think, you know, this is a challenge, isn't it, with looking at trends and trend lines and getting confused about the angle of the trend.
Correct.
Because it has come back to the angle of that overall uptrend. Now, I'll just get rid of that crazy crosshair that takes over. Has a mind of its own, it seems like.
Sounds like you.
But, you know, that's the angle of the overall trend up there, and on the monthly chart it's showing how it's come back to that line. But that doesn't mean that there wasn't already an exit. You know, there's lots of exits here that are showing around this topping scenario here, this temporary resistance on the stock, and it's pulled back already. So I'd say that, you know, if he'd studied the analysis and had some hard and fast rules, and he probably would have already been out. But there's nothing wrong with working with that initial stop loss. No. So it's what he said. He bought it somewhere around August here, so somewhere in, he said he bought it near the top. So at this point in time, from that level there, from that really big high there, he's down about 14 or 15%. So he said he's about 75% of the way to his stop loss, and he will stick to it. So I'll hold you to that, Dwayne, and I'll ring you up because I'll have your phone number now. Because I've got to send you a copy of the book. So I'll have your phone number and I'll hunt you down if you don't stick to your stop loss, mate. So to me, I think he's wise to stick to his stop loss, but I agree with you. If it does hold there, it'll be just lovely because of the angle of that trend you can see on the monthly chart. It is heavy resistance there, around $13.
Yeah, so, but really good question. So thank you much.
Our next email is from Manny. Hi, Dale and Janine. Just wondering your thoughts on an ETF called VTS. I know Dale doesn't like ETFs. You just challenge him. But I'm still trying to ask this question with my limited knowledge. I have attached a picture and looks like it has gone up way too far from its trend line. Do you think it would come back to its trend line? Also, if it has to come back to its trend line, the drop has to be significant from its current price, which is about 25% fall. I haven't seen this since inception. Love to see your expertise. Kind regards, Manny. All right, he's thrown a few technical terms in there.
But before we get into the stock, I just want to say to people, just give us a call. If you want to call and talk to Janine and I, it's 039290 9999. We'd love to chat to you. So now let's get into VTS.
Well, I love the fact that he's bold and he's challenging you.
No, he's not challenging me. I just don't like index ETFs.
Can you do that face
I
again?
don't like airline stocks either, but is that a problem?
That's lovely, yeah.
I don't like insurance stocks either. Is that a problem?
All right, Vanguard. All right, US Total Market Shares Index, VTS. Yep. That's the monthly chart on the left and the weekly chart on the right. Beautiful trend. Yep. Looks lovely. So we're looking at what the performance relative to the US market.
Yep.
And it's done quite well. So, I mean, what are your thoughts then?
It's an index ETF. You know what I think?
Well, what would you suggest?
Look, it is going up, and it's going vertical, and you know, it's like anything. When the market's going up, it'll go up, and if the market goes down, it'll go down. So it's really more about what we think of the market.
Yeah, well, I mean, it's following a really nice trend, which is really helpful, because when that trend gets broken, then you know that something's wrong.
Correct. And I did this last week for my interview with Jim Beach. I actually went through, I Googled best index ETFs in the US for this one, and I went to Investopedia, and I thought, well, okay, so instead of me being biased, Investopedia came up with these.
Okay.
So I said, all right, so I look at those, and then I looked at their performance over the last 12 months, and then I looked at the performance of the top 20 stocks in the S&P 500, and if you bought the S&P 500 stocks, it was really, really interesting. If I took them in order of alphabetical order and numbered them 1 to 20, I put the odds in one portfolio, and that blew the ETFs out of the water in terms of return. The odd numbers, sorry, that was the odd numbers, the even ones didn't.
Really?
Which was quite interesting. So, but the top 10, if you just had the top 10 stocks on the S&P 500, you actually blew every ETF out of the water. Okay. Completely.
Well, it's good.
So it was interesting research
to
do. So I do this sort of research all the time, because how hard is it to buy the top 10 stocks? You know, in the marketplace.
I think you've just sold people on buying the stocks and ignoring those ETFs.
Well, then you tell people to tell them to give us a call then. You tell them to give us a call.
Come on, everybody. Get to your phones right now and give us a call. We'd love to speak to you.
All right. You're going to tell them the phone number?
I think it's your turn.
Okay, it's
Next
my
question.
phone number, 92909988. Now, moving on, this is a question from B, who says, hi, Dale and Janine, love your show. Since I started watching earlier this year, I've learnt a lot. At least I've stopped dollar cost averaging, so well done there. May I know what you think of Macquarie Group share purchase plan? I aim to add on for the long term for its dividend, since the low interest rate is low. By the way, I have 2,200 shares at the moment. Do you think it's too high at $191 plus? Does it have more growth potential? Thanks, B.
Wow, look, I would never say a stock is too high, especially if you're holding it.
Yeah. I
think that's gorgeous. Thank you very much for that question, B. Looking at Macquarie, I'd say, look, it could go slightly higher, but obviously around that $200 is potentially a psychological level.
Yep.
I do have a potential turn just above that, so it may go slightly higher before we actually see it turn. I think the chart says it all. I don't even need to point to it.
Well, yeah, you do. B's written in a whole email. You've got two questions to answer. One is about the share purchase plan. Yeah, well,
look, the share purchase plan, I just say poo-hoo to that.
Why?
Look, I just really think that with share purchase plans, some of those corporate actions are not worth their the paper that they're written on. I think that they're there to make shareholders happy who historically believe that those sorts of things, are beneficial to them. But in the long run, are they really? That's what I would question. So I think, with a more structured approach to building up a holding in your portfolio over time, doing it when the time is right, not just when the company says, I've got this share purchase plan for you. So, but right now, I think it is quite high, and I would be saying, apply caution, but I wouldn't be necessarily jumping out yet because there's no exit.
Okay, so that's our take on Macquarie, hey?
Very good. All right, we have a caller on the line, and this time we have Alex. Hello, Alex. How are you tonight?
Hey, Janine. How's it going?
Good, mate. Great, I can hear you. It's always exciting when I can hear someone on the other end of the line. S32, that's your stock. What's your question about S32 tonight?
Yeah, it's good to be back on. I asked a question about SE2 a couple of weeks ago. Now I've been watching the chart. After reading your book, I'm a bit confused as to, if I would say it's in a downtrend yet. So it's been down for a month. I'm about 13% off or trailing stop loss. Sorry, not from the buy, but from its peak. Do you think it's starting to go down now, or would you be holding on to this one?
Yeah, great question. All right, Alex. Look, I like this stock. It's a really good one. So, it's from time to time can be really good for your portfolio. And we've got on the screen there, we can show you the chart now. On the left-hand side, you can see how it does trend beautifully when it gets going. This is the monthly chart. So that was that move up from that low in 2016. And then we've got the move up out of the COVID low. but it looks like it's met heavy resistance near this top here and it's turning. I would say that that's a complete, that's a change of its short-term personality at least, given the sell-off we've seen. So I think that you're very right to be questioning this right now. So it's about 15, a bit over 15% off that high, maybe almost 16% as at the close today. And yes, it could fall further. That's the risk with these stocks when they do pull back like that.
It is. So I think Alex's question is sort of like, is this just like a short-term pause in it where it's dropped away a bit? And is there more to go on it, or is it something he should be more worried about?
Well, look, I think that there's a potential that this stock could pull back further. That's my take on it at the moment. I don't think if it does pull back, the problem is it could go to about $3.20, and that's the real concern, because if he's only just bought it, he didn't say when he bought it, did he?
No, but I don't think he...
And so the problem is that if he's bought it over recent months, then it could potentially wipe out all of his return if he's got one. But I wasn't sure whether he had a negative. I think he said he's got a stop loss in place and it was getting near to that stop loss. And normally what happens if the stock is falling to its stop loss, we just wait for the stop loss to be taken out, because it's all about practicing a process over time. It's one trade in potentially lots of trades that you take. So if you can get that discipline in having the rules to buy and the rules to sell, then you'll be much better off in the long run. So looking at it right now, it could reverse by the end of the week. It's just stranger things have happened, but at the moment, obviously, it's more to the downside.
Okay, there you have it.
Thanks very much, Alex. That's great. Now we have another caller on the line. Gee, the phones are running hot. We've got Stephen here, and he's talking about a share buyback. Stephen, how are you tonight?
Yeah, hi Janine and Dale, how are you going?
We're super fantastic, Stephen. No problems at all, and we're going to get better. So you got a question for us tonight?
Yeah, look, I've noticed a couple of the blue chips, notably Telstra and NAB, and there's probably a few others in there as well.
Yep.
They've got some share buyback plans at the moment. Now, my view is they're kind of setting the market price so things go sideways. Well, what's your take on those plans, and how should we approach that if we are holding those stocks?
Yeah, it's a really good question with share buyback plans, because they really got to look at what they're doing and why they're doing it. And share buyback plans are really part of good capital management. But I think I'll let Janine sort of get into it well, because she's more passionate about it than I am, Stephen.
Yeah, look, I agree. When there's a share buyback, I always like to have a bit of a read as to what's being said about the share buyback at the time. How many shares are they actually buying back? Is it on market or is it off market buyback? The off market buybacks can create a lot more of a stir out in the marketplace. The on market buybacks actually, like you rightly said, can create a bit more stability in the share price or create a bit of a ceiling temporarily for the stock. So. And I think if that's the case with Telstra, it's good for Telstra if they do that, really. And I just, if you're using Telstra as an example, we've got a long-term chart of it on the screen there. So I just think for a stock like that to be doing a buyback when it's in a trend like that, I think it's great.
Do you really
want to do it?
It's also about whether it's an on-market buyback or an off-market buyback. Whether they're making an offer to shareholders. Or like Westpac did an on-market buyback for years, didn't it? It was another one after another one.
Look, I'm not going to participate. I wouldn't participate in a buyback. I'll sell my shares when I'm ready and when the technical rules tell me to sell. However, some people do it because they might have been thinking about selling their shares and they're thinking, oh, well, then I don't have to pay the brokerage. But I would never let brokerage be a driver for a decision on the stock.
Yeah, so that's why you need to look at those share buybacks if they get offered to as a shareholder. But if they're doing an on-market one, as you're right, it could just make the stock really go sort of sideways, a bit stalish for a while, setting that limit. So, but then you've just got to make that decision yourself. Is this a long-term hold for me or is it a short-term thing? But I'm with Janine. I don't let that determine my decision to buy or hold the stock. The stock tells me whether I want to hold it or not. So, but thank you for your question.
I'm excited about that.
It's a really
quality
good
of the questions.
I know. I absolutely know. Now, before we get into tonight's topic, if you are enjoying the show, then please hit the like button. Now, give us a big thumbs up so others can find it and enjoy the show too. Now, if you are keen on understanding the stock market, then you might want to go to our website, wealthwithin.com.au. There's a truckload of free articles. You can also get a copy of my first book, How to Beat the Managed Funds by 20% for free, All you have to do is pay the shipping, and it's pretty cheap. Now, later on in the show, we're going to give you another opportunity to call into the show and talk with Janine and I and give us your most burning question so we can answer that. So stay tuned for the opportunity, and more importantly, be ready to dial when we tell you to. Okay, now it's time to get into tonight's topic, best 5 mining stocks to buy. Are BHP, RIO and FMG on the list? Well, I'm not going to tell you, as you're just going to have to wait for Janine to bring up the charts.
Now, do you need a drink of water after all of that?
Probably.
You would have to live under a rock to not know that the price of iron ore and in turn our big miners crashed earlier this year. Some investors took the big fall as an opportunity to get in cheap, trying to grab a bargain. However, many got in too early, only to suffer losses. So the big question that we have to answer tonight is, have these miners stopped falling? And if they have, is it time to buy or should we look elsewhere?
Now, along with the big miners, we're going to look at a few opportunities within the materials sector that are not widely talked about, but show really good potential for profit. Now, as Janine mentioned, some investors jumped into our big miners way too early, attempting to grab a bargain, and in doing so caught the falling knife that we often or so often talk about. Now, we've also discussed many times how buying into stocks that are falling away is high risk, and your probability of getting caught out with this strategy is very high.
One thing we know with certainty is that quality stocks stop falling eventually. When they do, it spells opportunity. The big question that many traders fail to answer is, has the stock I'm about to buy stopped falling? Not knowing the answer to this causes inconsistencies in your trading and losses. In essence, not knowing and taking a guess is very often costly.
Yeah, like I get you, Janine, because the two biggest mistakes that Janine and I see constantly are buying too early and selling too late. Now, both lead to poor performances, losses, frustration, inconsistency, and many other things, yet we find both investors and traders continue to repeat the mistakes as they fail to learn.
Now, Dale, before we get into the charts and look at how severe the decline of iron ore and the stocks have been that we've mentioned, we should take this opportunity to first discuss some of the fundamental data for each stock which looks interesting. This is important as it tells us what we should be looking to buy, and it just does not tell us when, and that's the challenge with fundamental data. And we will get to that later.
Okay, now according to Morningstar data we looked at yesterday afternoon, BHP's PE ratio was sitting a little bit below 8. Now, whilst RIO was around about 4.5 and FMG was about 4.1.
Now that changes quickly, doesn't it? This seems crazy when you consider some years back these shares were sitting on double-digit PE.
They were.
Growth stocks historically pay below market average dividends, and so double-digit PE ratios were normal. However, in more recent years, the data has changed and these stocks have been impacted by the swift decline in price and things have reversed.
Yeah, correct. Now, whilst normally dividend yields are lower and PE ratios are higher, presently dividend yields are high and in double digits, whilst PE ratios are low and in single digits. Now, word of warning here, don't take this out of context as if this is the new norm for these stocks. Remember, these stocks move fast, and that means dividend yields can and do change just as fast, which in turn affects the PE ratios. Now, we also need to remember that these figures indicate what has already occurred and doesn't mean these stocks are a bargain.
I think those are all important points, as often investors get excited about seeing figures like those and fail to really understand the consequence and so start guessing, which, as we've just chatted about, can and often does lead to costly mistakes. Let's now get into the charts to find out if these stocks have stopped falling, as well as reviewing iron ore. We're also going to take a look at a few other really good potential opportunities.
Okay, now on your screen right now is a watch list displaying iron ore and the 3 large miners, BHP, RIO and Fortescue.
Yes.
So do you want to take it away, Janine?
Right.
Do I need a drum roll?
No, you don't need a drum roll. So look, the iron ore price has actually gone down to 80 odd
Yep,
dollars.
so that's that top figure where it says this big long word that I can't even spell, let alone say.
Yeah. So it's actually fallen further than what I'm showing there. But we can see FMG, Fortescue, this is the monthly figure, RIO and BHP. Now FMG's actually ticked up off
For
its
this month,
bottom.
yeah.
So this stock can be hugely volatile and can reverse really quickly. And it can be deceiving for investors, can't it? Because investors can think all of a sudden that the stock's up again
Well, they
when
do,
it's just
don't they?
temporary.
They see it bounce for a few weeks and they think, oh, it's a new uptrend.
Well, it could be 1 week up.
Well, it could be 1 week, yeah, and then it turns around and does exactly the opposite in the next few weeks.
That's right. Now, if we look at the two big miners there, you can see that they're the heavyweights, obviously. So 148 billion and 189. So that's BHP and RIO. Now, Fortescue's about a third of the size of RIO, which is interesting. So, and it sort of makes sense, doesn't it, when you're talking about the volatility of those shares. So that's the first thing to consider when you're looking at stocks, where they sit in the overall market, how big are they, how liquid are they, and therefore that can then have an impact on the volatility, and is that the sort of stock you should trade? Because some people might be thinking, I'll go for Fortescue because it moves faster.
Absolutely.
But then there's a downside to that.
There is a downside to that because also it falls fast.
That's right.
So are we going to go and look at the yearly or are we?
Look, if you want to look at yearly, I'm really happy to...
Because we're talking about how much it fell.
Yeah, that's right. But I mean, this is not going to... Obviously, if we're looking at a year, we need to look at the actual charts to get a really good feel for it.
Yep.
But this is this year. So FMG was actually down around 33%. RIO down 22%, and BHP around 14.4%.
So this is from 1 January this year.
This is this year, calendar year, yep. Okay. So it's interesting to see that the stocks have, moved quite a bit since then, and they can, be quite volatile at times. We saw the big miners fall dramatically over a number of years, and we're just going to go to the charts and have a look at that. Now, I've got a chart of... this is the global price of iron ore, which obviously has fallen down to somewhere around 85. It's gone below the bottom of my box. So this was a price probability box. So remember we had people writing in about this some time ago. So this box actually shows where I expected iron ore could fall to. And I was actually thinking, best case scenario, I was thinking that it was more likely to be somewhere around this 130, in that 130, 140 zone, that we would see the iron ore price come back and then it would turn around and head back up again. But I think that there's a whole lot of stuff to talk about here, because it's not just about forecasts and what's happening. It's about looking at what we're being told in the media as well, because there was this focus on what the government had allowed in the budget papers. So they had allowed that if iron ore fell to about $55, they'd still be fine. And there's a whole lot of talk going on about that at the moment. When I did a little bit of research on that, I thought, well, okay, nobody could predict that COVID was going to happen. No. Nobody could predict that China were going to buy up iron ore, and that what was going on overseas was going to unfold exactly as it did. If they had have, then they would have had different allowances potentially in the budget for that. So, the fact that the price has come back so hard as it's done, it's more or less coming back to where the market is happy for iron ore to sit. It's a supply and demand equation completely.
Yeah, that's what a lot of people are thinking. It's like, who's Australia going to sell iron ore to if China's not taking it? Or what happens if this? And everything falls to an own level. It's like water just rises or falls to a certain level and then equalises. And so iron ore will do this, stocks do this, everything, all commodities will do this, because we still, as a world, we're still going to be building things and still needing iron ore, and they've got to get it from somewhere. So if another country's supplying it and that's more expensive to do it there, and ours is cheaper, they'll start buying ours.
Yeah.
So
there's all this communication going on about what China is saying and what they're willing to buy from Australia, what they're blocking. But I think, it's more about what's going on in the big picture sense, because if you have a look at China, there was a scare with Evergrande.
Well, their banking system's in a bit of turmoil.
They've had lockdowns. There's all sorts of strife with the banking system. So I'm not surprised that this is what's gone on. And I just think if you I like conspiracy theories, okay? So, but you just can't read too much into it. Sometimes you've just got to come back to the basics and think about what's happening with the supply and demand equation. So, but I think what's beautiful about what is actually happening here with the iron ore price, with it coming back,
it's just come back
to its trend. That's all. which is really healthy for any market to do, even a volatile market like iron ore, as we see. I mean, in the past, it's done the same sort of thing here. You know, if you're looking at the angle, eventually it came back to the angle of that trend and fell away through it. I don't think that it's going to do that this time.
No, I don't think it will either.
I'd be really surprised if it did, given the phase that we're in at the moment around the world, the amount of money that's being spent on infrastructure. We're not in that phase like we were with the GFC. It's completely different, but people are calling this sort of thing, or could we end up being in real strife because governments around the world are spending more than they have?
Well, yeah. Correct.
Well, they've got a licence to print money, haven't they?
Well, when you got fair currencies, you can actually do that, can't you? So it's fair enough. So we need to go and look at some stocks.
All right, so let's have a look at BHP. Now, we did talk about the miners some weeks ago. I'm going to flick straight to the monthly chart of BHP. I mean, who'd have thought, you know, BHP trading around these levels, and look where it is today. It's quite amazing, isn't it? And I just think that over the long term, I'd expect to see similar sorts of things unfold for mining stocks down the track, because it's not like, you know, there's only a certain finite supply of materials.
Correct.
And there is this ferocious consumption that happens in the human world, so it's not going to stop. But what was interesting to me was the fact that BHP had only grown about 20.4% from the GFC high. As part of this push up just prior to COVID, and it's fallen back below those levels. So to me, I think it does tick the box for opportunity when we're looking at
I do
this.
too. I think, look, my thinking is with BHP, I think it's done most of its fall, if not all of it. It hasn't proven to stop falling yet, but I don't think it's got too much.
Well, as I said to you, there was a potential for another short fall on it, but it is making that what looks like a basing pattern. There's no confirmation that it's going up just yet, and
No, I'm just, as I said.
Yeah, you're not saying that, are you?
No, I'm not saying that. I'm just saying I think it's done most of the fall, and there may be a little bit left, but I just think there's some really good opportunity on that stock.
Yeah, well, I was saying 10 to 15% downside is the potential that we could see for BHP in the short term, but will it return to that growth? Let's just have a look prior to that when we had, you know, high PEs, what the stock was doing. These sorts of moves, it's no different really. BHP hasn't really changed, and yet the fundamentals are different.
Okay.
You know, interesting.
All right, so now we're going to look at FMG.
Okay, FMG is another one. So we've looked at this as well. So we've seen a 48% fall in total almost in FMG, but it has just ticked up this month. So you can see that bar on the right-hand side. But FMG is the one that I would expect to fall back further because it's trading still above that GFC high. And it did rise 102%. So while it's more volatile on the downside, it can be better, obviously, on the upside at times. So that's something to bear in mind when you're looking at BHP.
So you're thinking this could be a bit of a false rally, so don't get in because you might be catching a falling knife.
Well, look, the challenge with FMG is that you could get some really nice short-term gains on it.
Yep.
You've just got to be prepared to have a tight stop loss in case it goes the other way, but it depends on your portfolio and the way that you want to trade, whether this suits you. If you're long-term buy and hold, this stock wouldn't be the one that I would pick. It would be either BHP or RIO or maybe both. So RIO is actually come right back as well. So we're just looking at the monthly chart here of RIO, and you can see once I actually stop playing around with the slider bar there, you can see that it only got to about 10.6% above that pre-GFC high. So it doesn't make sense to me in a long-term picture that these stocks would be trading below those levels right now, even though, okay, we have seen the supply equation change significantly. I just think that this is, you know, setting up down the track for further opportunities that we will get. So it's about being patient is really the point.
This has got to be very similar to BHP in terms of where it's sitting in price. It probably won't have too much more to fall if it does fall further.
Yeah, well, if we just quickly go back to BHP, and unfortunately, you'll have to get your magnifying glass out to read that, so I'll just switch back to this one. 3.5% decline. We go to Rio,
35.
3.6. So there's not a lot of difference there in terms of the downside that we've just seen.
Yeah, 35, 36%
Yeah.
fall, yep.
Yep. So I'd expect the similar, and these stocks have been quite similar over the last decade. So I'd expect that to be so. But BHP is obviously more diversified, but RIO, it's changing. You know, what they're getting into over the next decade could be completely
Well,
different.
Fortescue's already announced that they're constructing a hydrogen plant or a hydrogen processing plant. I can't remember the exact words for it in Queensland, and they've invested in one, I think, in Argentina, but somewhere overseas they're investing in. So getting into hydrogen energy because they're looking at that being the new future rather than batteries for electric vehicles with lithium ion. That this could be. Now it's way too costly at the moment and not great to do hydrogen right now. But doesn't mean technology is not going to change. And they're moving quite early.
It will catch up to
so it'll be a good
demand,
space to watch. So that's interesting. But now, do I do a drum roll now? Because you've got two stocks.
Well,
that,
so out of the three stocks, I would say short term, higher risk, more volatile is FMG. If you're wanting that sort of strategy, BHP and RIO, longer term suit pretty much any portfolio, I would say. But look, I just chose a couple of stocks that were different that we haven't spoken about before. I think one of them we have. I think someone's written into us about Lynas before. They're in the same area, but
this
not.
one's Sims Metal.
It's not iron ore, right? But it's in materials. So.
Well, we talked about this in terms of alternatives, renewables, when we talked about new renewables.
Oh, we did too, actually. Yeah, you've stolen my thunder.
Sorry, I'll shut up.
Okay, Sims Metal, leading on the chart there, you can see leader in the metal and electronics recycling and innovative recycling in a number of areas, including renewable energy industries. I put that on there because I would never have remembered what that was.
Well, I did.
So you can see here, what's lovely is it's come off this bottom, and we have seen a move towards this whole thought about using scrap metal. You know, with the price changes, with iron ore having been so high, there's been opportunity for the scrap metal area sector to,
But
jump in.
that looks really nice.
It does look lovely
like it's got a ton of
long term.
upside.
I think this could be really interesting. I'm not saying it's a buy now because it isn't, but it's an opportunity to watch going forward. So I like this one. And Lynas Rare Earths is another one. I just see this and look at that. It's just beautiful. And some people say, okay, has it gone too far? We often get asked that question, and we sometimes say yes, stocks have travelled too far. However, I think that there's more upside for this one. Yeah, so I quite like this, but it will be volatile, so you've got to watch your stop losses on this sort of share, but it just looks like it's trying to contract with the angle of that trend all the way up, doesn't it?
Very, very, very much so. It looks pretty good at the moment. So you're saying this one's sort of more short, medium, long term? What are you talking about?
Look, I would say short to medium term for Lynas, but it could be a good short term strategy to trade in and out of. You just have to have a really good set of rules that you've tested on it that work well.
Okay, fantastic. Well, before we move on with the show and take in some more of your fantastic questions, I think it's very important when you look for opportunities that you do so in quality stocks, preferably in those sectors that have been sold off. But I do have one provision, and that is that you make sure you have good rules and a solid understanding of how to apply them.
Now, this is important, really important, as it allows you to stop guessing so you make better decisions around when to buy and sell. Also, having solid rules will help you eliminate or at least manage your emotions properly when you trade.
Okay, so in summary, we believe iron ore stocks will again provide some great returns for investors. However, for now, be very cautious whilst you prepare for the great impending opportunity in some of these stocks. And remember, the goal is to always keep your risk as low as possible. And this means being prepared to let the stocks rise off their lows before buying, as this greatly reduces your risk of catching a falling knife. Now remember, you cannot control what a stock or market does, but you can control the risks that you take in it. So that's it for our topic for tonight. Now, before we get into our next email, I do hope you have your phone ready and have been patiently waiting for the opportunity to call into the show to ask Janine and I your most burning questions. So now's the time to get dialing. Remember, the number you need to dial is 03 for Melbourne 92909988. That's 92909988. So get dialing now. I know you'll excite Janine if you do.
Oh, jeez. While you call us, we will get into answering the next email, so call now.
Alrighty, the next question we have is from Andrew, who says, "Hi Janine and Dale, thanks for your advice. Keep up the great work. Do you feel the pre-Christmas spending will increase the value of Z1P shares? They seem to be tracking like a roller coaster, and looking at their trend the past month, they might be in for a decent rise. Do you agree, Andrew?"
Andrew,
interesting.
good
You know,
question.
this-
We haven't had Z1P for a while. It was the hot stock, wasn't it, for a
Do you
while?
know, this week I three emails all sent me charts, including Andrew.
That's very thoughtful of them.
Yeah, they did. Very, very thoughtful of them. So it was interesting, but I agree. I don't think he's right, though.
Right. Look, I think when this came up last, we were really concerned about potential
we were.
downside for this stock, and it is actually looking like it is tracking as we expected. So you can see there on the screen that the stock looks like it's just fallen below all of these important levels that it's tested before. So I would say that there's a real risk now. It could be heading to between $4 and $5, even if it tries to recover temporarily.
Well, it's a good theory that he's had, isn't it? It's like, well, you know, more spending in Christmas, people using buy now, pay later space, so these guys should make more money, but it's not showing it on the chart, is it?
No, so what does that mean, really? Does it mean that the market's a bit more saturated with these buy now, pay later
Well, it is.
providers?
There's quite a lot of them, and obviously, you know, Afterpay's been the largest one in our marketplace. Like I talked about in my market report last week, Westpac's come out with an interest-free
isn't that
credit
great?
card. Combank's already had one for 2 weeks. You know, Afterpay's basically trying to get into banking, so to speak, with their new app. So I think the war started.
I think
really
it has
the
too.
war started, and it wouldn't be long before I think, you know,
Well,
NAB
banks, you know, especially American banks, said they never would do that. So it's great to see that this is what, you know, the environment that's been created.
Yeah, so like I like the thinking. Like I think it's great, and we should commend him for the thinking that this could increase the share price, but the chart's not telling us, which means the big end of town are not buying it.
That's right.
They're really not buying this at the moment. So right now, I'd be staying right out of this stock, mate. I really wouldn't, and just sitting back and waiting until it, like we're talking about with our gold mining stocks. Like we were talking about with that, saying, you know, otherwise you're catching a falling knife. Now, what happens quite often is that some people will see this stock, like Z1P, going, oh, Christmas time coming up, it's cheap, it's come down, I'll jump in now because it'll rise over the next 3 or 4 months and I'll make a mozza on it. And that's how they catch falling knives. And that's why Janine and I constantly say you've got to wait for it to hit a bottom, start to rise up and prove that it's staying above those lows.
Yeah, exactly. And it's also a little bit more than that. And I explain it this way. If the big money are not putting their money behind it, why
should you?
Yeah, that's important.
That's a really, really good one, isn't it? I like that one.
Thank you.
Oh,
All right.
You can stay.
We have another email. Our next email is from Theo. Hi Janine and Dale, hope you're both well. With all the talk of metaverse and the digital integration taking place in various workplaces and industries, what are your thoughts on Vection Technologies, ASX code VR1, and their rise with respect to the historical chart? I'm holding this stock as an investment for the long term, 5 years plus, but tempted to take some profits off the table. Thanks, Theo. Great question. Interesting stock, highly illiquid by the look of it.
Looks like a roller coaster, doesn't it?
Doesn't it? And look, generally this is not the sort of thing that I would say hold for 5 years plus. It's more take the opportunity while you can get it.
Well, it is speculative, isn't it? And that's getting back to what we were talking about before. Is people think, well, this is going to be okay. This is going to do X, Y, and Z in 4 or 5 years.
I've seen so many of those sort of
hit and
stocks end up just tracking. They just have their day. They have these volatile actions, and then all of a sudden they just track down, and
then people get caught in them,
they disappear into the ether because then the big funds don't want them because they're too small.
Yeah, how many times have you seen a good buy turn into a good buy?
Yeah.
You know, it so often happens. But let's go and have a look at the chart anyway and have and answer it for him, or have a good look at it for him.
Yeah, look, I mean, you can just see on the monthly chart how volatile this thing is. So in 1 month, and look, some people are going to get excited about this, it actually rose 87%, closed lower than that.
Hang on to your rocket seats.
Yeah, so a lovely return. However, it could just get wiped away within a couple of weeks, and then you'd be left there thinking, what just happened?
Well, you would, because
go.
Well, no, I was going to say it's because of that. It's the mentality of that. So if you're looking at the chart and you've bought into this stock and you've made 80% in a matter of a few weeks, what are you thinking at the time if it starts to fall away?
You're thinking, oh, I can buy more. It'll
I can
be
buy
cheaper.
more. And then next month it's going to go up another 80%.
Yeah.
But then it drops 15 or 20%. And you go, oh, I could probably buy more. And then it drops 30 or 40%. And next minute you're down
Well,
to where
that's
your
where
buy
dollar
price
cost
is.
average has killed a lot of people, isn't it?
Correct. And then it keeps falling and falling. And so quite often you'll see a good trade turn into a buy and hold investment that doesn't do anything like you were talking about.
Yeah, that's right.
So, and people then go, oh, I should have sold it when it was this, and I should have. And if you keep shouldering, you should all over yourself. And then you end up with should have nothing. So that's really what it's about. So
All right.
look, I'm agreeing with you.
Yeah, so look, what are we saying? I mean, if you are holding this stock, potentially look at taking some profits. I mean, it hasn't given an exit, but how do you make that judgment when it's so volatile? Let's have a look how far it's come back from this recent high. It's already fallen 16%. So where's it going to go from here? I just want to have a look at the daily chart. We don't do that too often, just to see, but for something like this, it's so short a time frame. Look, I mean, it could come back to around 14, 15 cents, and I'll just go back to the weekly there. And look, there's a lot of resistance around here that could become support. So I would say that the risk is in the short term, it could be back here. Now, when you're wanting to take some money off the table, I would actually, if it was me, I'd be wanting to take my original investment off the table so that I could just play with the money's market from the market's money. From there, take the risk off the table, and then if you're planning to continue to hold it, at least then you've got no risk except to the profit, and then decide without any emotion, like, you know, when the market's not trading, how are you going to manage your risk on this in terms of the risk on the profit going forward, and write it down, because that will actually hold you to it. Do you agree?
Oh, look, I absolutely agree with you, because, you know, to me it's, you know, his whole thing is to hold it for 5 years plus. And not that he's saying, do we think it's going to be great in 5 years' time? Because a stock like this, you can't do that. It's just not possible to go, what this is going to be like in 5 years' time. We can only give you our thoughts on what the psychology is on the market right now, or that particular stock right now.
That's right.
But in the same breath, if he's looking at 5 years, what does it matter what's doing it now? If he's thinking long term, he's done his research on this area, he thinks this is a great area, big growth area.
To me, I'd be saying, look, you take a small stock like this, if you can make some good money out of it, you put it into some stocks that you could hold for 5 years plus.
Oh, absolutely. And I think that's the key is you've got to, like, do that research from a long-term fundamentals in especially new areas. And when we're talking about lithium just a minute ago, we're talking about hydrogen a few minutes ago as well. So those sorts of technologies.
It's also about how much money do you invest in this sort of area as well, because your portfolio should be focused on the biggest stocks, and then maybe it's only a 5% or, you know, whatever, a small amount of the portfolio goes into this one stock.
But do you know how many people get that wrong? Like,
so they put more into the little ones?
Yeah, they put a lot of money into the little ones thinking that's where they're going to make their riches from, but it's actually the bigger stocks. It's the opposite. And I know we get this with a lot of traders. You know, they come to us and they want to trade FX, and they're trading options, and they're trading CFDs, and they're doing all these little things for $200, $300, $400, $500 all the time, in and out, and they're trading a bit. And it's like, well, do you want to is that your lifestyle, or do you really want to do that? And have a think about it. And I go, why are you doing this? Oh, so I can make some income. But what they don't realise is when they're doing that, they can't do something else, which actually makes them far more money.
Yeah.
And they can't really see the wood for the trees, because they're so busy on the day-to-day buying and, you know, researching and doing all this speculative type stuff, thinking they're doing really well, but they're actually holding themselves back. And it's not until we really get into what they're doing with them. And I'm working with one of our students right now on this stuff. And so that's why it's really come to my mind. And they're doing some strategies, and I go, you know, that they were doing before they come to us. And I go,
actually, we've got to catch up with the mentor. It was the lovely people that we were working with again soon, don't we?
Yeah, we're going to be catching up with them in a few more weeks, actually.
And are we opening it up to bring some more on next year?
No, not unless they pay 3 times the amount.
I don't think so.
No, okay. You sure?
No.
Right. But again, it's about working out what you want. What's your goal? What is my goal, and what is my intent? And then you put stocks in your portfolio that match that intent. And all too often people think smaller stocks are the ones that just going to make them all the money, where the actually opposite is true.
I agree.
You know.
Look, guess what?
What?
We've got another caller on the line.
We've got another caller on the phone. Fantastic. I believe we've got Mohammed on the line, have we?
Hi, Dale.
Hello, Mohammed. How are you? Where are you from?
I'm from Melbourne, cold Melbourne.
Awesome, matey. Awesome. So I'm enjoying the cold with you. You have a question for us today, mate?
Yes, really nice show. I have a question about CXL stock. It's related with iron ore. They kind of have a technology to do something with the iron ore to reduce carbon footprint.
Yep.
I just wanted to ask you about that.
Okay. So do you own the stock at the moment?
No, I'm thinking about it, but not made a decision.
No, that's okay. So you've been doing a bit of research on it.
Thank you. Yeah.
Okay. So what I'll do is I'll let Janine have a look at it for you, and then we can take it from there. Thank you for calling in.
Thank you.
What an interesting stock, and great that you called in tonight, Mohammed, to talk about something relevant to the topic as well. So I'm just looking at the chart of this now and seeing this huge rise on CXL. Now, I mean, I think it could potential to go to $9, right? However, you know, should someone be putting money into it at this point, I would say I wouldn't be putting money into it right now because it's just run so hard.
Yep.
So unfortunately, I think that he may have been maybe a couple of months too late in terms of this one, looking at the right-hand side.
I think so too. The analogy I use is you walk up a seesaw and eventually it tips the other way, but the steepest part is before it tips.
Did you just think of that? Because I've never heard you say that.
Oh, I say it all the time.
You've been reading somebody's books, haven't you?
No, if you watch my stuff with Jim Beach, you know how many times I've used seesaw as an analogy? Not that Jim's simple, but I just go, well, it must make sense. You keep going uphill until you don't, then it goes down again.
Thank you very much for that.
So there you go.
Wonderful.
So you can borrow that if
things.
you like.
I learn new things about him all the time.
Okay. All right, well, that's our thoughts on
Calyx.
CXL for Mohammed, and very much thank you for calling in too.
Now, if you called into the show and you missed out this week, then keep trying, as we'd love to chat with you. Just make sure that you write your question down and be back here watching the show next week, as you'll get another opportunity to call in when we give you the cue.
Fantastic. Now, remember, the best way to have your questions answered on the show is to give us a call live between 7 to 8 p.m. Otherwise, you can email your question to us right now whilst it's fresh in your mind. Now, remember, you need to send your email through to info@wealthwithin.com.au. And remember to include Wealth Within Live in the subject line. That way it gets to me. Now, also, we'd love you to show your appreciation for the show and those who bring the show to you each and every week to help educate and answer your questions. Now, you can do this really simply by just subscribing to the channel. So click now, but also give us a big thumbs up to say, hey, you enjoyed the show.
Well, that's it for tonight's show. We do hope that you not only enjoyed what we presented, but also received great value from our answers to your questions.
Okay, now remember to put this show into your calendar and join us right here on the live Australian Stock Market Show every Tuesday, 7 to 8 p.m.
As always, thank you for joining us, and we hope that you have a great week. We look forward to you joining us again next week. For now, goodbye, good luck, and good trading.